Hi, and welcome to this week's The Mortgage Broker Broadcast. My guest this week is Dave Coleman from Positive Lending, and Dave's a regular guest on the podcast. He was on the podcast earlier on this year, about February time this year, where he came onto the podcast and talked about his take on 2024. So I thought it was only good to get him back onto the podcast. It's the last podcast of the year, so this is the final one before we start 2025. So I thought it'd be good to get him back on just to talk about and get his take on 2025, what his thoughts on the market, the challenges facing, and things like that. So, yeah, this week's guest is Dave Coleman. For those listening to this podcast, the Mortgage Broker Broadcast for the first time, I'm your host, Craig Skelton. I have my own mortgage broker firm, but I'm also a mentor and coach dedicated to helping mortgage brokers and business owners navigate the challenges of self employment and business growth. Before we get into the podcast, if you do enjoy this podcast, please leave me a review, please subscribe, please leave me any thoughts or comments on whatever platform you listen to this podcast or watch this podcast. Your support helps us grow and reach more mortgage brokers and business owners who can benefit from listening to this podcast. So now let's just get Dave onto the podcast. So welcome back onto the podcast, Dave. How are you?
I'm all right, thank you, mate. It's been a morning, but it's good to be back. Good to see you. Always good to catch up. Yeah, trains, planes, and automobiles. Maybe not planes, but it's been one of those days.
The joys of commuting, given the time of year, and yeah, but the one positive, well, there's two positive things. You've got your coffee, which is the main thing. The second, like,
Absolutely.
I'm loving that holiday sweater. That is a nice colour kind of going on. I sort of like the sort of the red, white, and blue.
No, I've got a team meeting after this with circa 35 advisors in it, and one of the briefs was to wear a Christmas jumper. So I'm either being stitched up, I'm the only person in that meeting with a Christmas jumper on,
I
or
was just
possibly
gonna say you're gonna be. I think that might be stitch up. I think you're gonna burst into the room. There's a Del and Rodney, Only Fools and Horses, when they go to that wake, and then they got the Batman and Robin, and then it's that wake, and they burst through the room.
One
Do you know?
episode, one episode, brilliant.
So thanks for agreeing to come back on. I just wanted to. I was looking back at. You've been on the podcast a couple of times now, and I think you sort of we're getting to this sort of tradition. You was on a bit. You on in February this year, which we talked about the 2024 market, and I thought it was just good timing as we get to the end of the year, just for you to sort of come back on. Obviously, it's great to see you and talk to you as always, but just really get I've got my thoughts on the market for 2025 and how that's looking. But I just thought it's good to chat, good to you, and just really get your take on it with regards to what the new year has to offer for brokers. But just first of all, for those that don't know who you are and not listened to this podcast before or seen you on LinkedIn, I don't think there's a broker that hasn't seen you on LinkedIn, but do you want to just do a brief introduction?
Yeah, of course. Officially, David Coleman, but Dave, head of sales at Positive Lending. Positive are a master broker in the market, supporting everything specialist. So specialist products that you can't access or you need access into for supporting clients.
Thank you for that brief introduction. Do you mean I normally say, can you give a brief introduction? Then people give their life stories and then you sort of got no content for the podcast. Like, why have you just done all that? But no, I appreciate that. And it is, like I said, good to get you back on. We normally have our buggy golf wars going on, which we sort of missed this year because Julia's changed the day of the golfing event. I couldn't make it, and vice and sort of things going on. So yeah, missed our buggy wars that we've not had, and I normally see you at the annual golf event. So we'll have to see how that pans out now, moving forward. Now that Julia's no longer with Open Work, and whether that sort of anybody takes up the reins for that, we will see. But yeah, just so it was just really when you look at sort of 2025 and the challenges. More importantly, first of all, let's look at this year. What have you sort of seen the key challenges that brokers have faced in 2024 from your business point of view?
I think it's been a lot more challenging to place clients or get the clients exactly what they want via more traditional means. So if you look at business levels from our side, second charge mortgages has just grown and grown and grown, and it's not slowed down. I don't foresee that slowing down. I think that will probably continue into 2025. because of the USPs and the access that that gives the client to capital raising what they need to do. And similarly with the bridging market, when you look at bridging overall as a product, what's massively changed? Nothing. A few tweaks here and there, and lenders messing around with rates and stuff like that. Great for the market, but overall, it's the relevance of the product in the market. And whereas bridging historically was probably seen as a dirty word, or it's really expensive, you shouldn't be doing bridging, whatever. More and more brokers in the market had to open up to the fact of bridging being a solution for their clients. And also, I think when you look at some specialist products, I suppose broadly, consumers are becoming more aware of what they are now, and that opens up a conversation with their broker, saying, because I think typically if a client phones their mortgage broker, they don't phone up and go, "I really love a bridge," or "I really love a second charge." They phone up and they go, "I want 100 grand. How do I go about it?" And the broker's job is obviously to try and find a route to suffice the client and get them a solution. But whereas all the eventualities that we've faced in the mortgage market with higher rates and client demographic and etc. 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 It's not been as easy to get the client exactly what they want via the means that they would have done maybe 5 years ago as such. So it has led into more conversations around specialist products. And again, this has been kind of part of my pitch really this year. Is brokers a few years ago were going, yeah, okay, well, I need to know about second charge and I'll use it as and when required. This year, the theme has been like, Dave, can your team come and see me to talk about second charge? Because actually, I need to understand more about it now, because we're finding more further advances being declined, or loan size being reduced, and the client demographic is changing. So my once vanilla, clean client bank is now starting to experience stuff that's maybe not so clean. It's a little bit of impaired credit or adverse, or income affordability issues and stuff like that. So that's led into the more than stuff that we do. So from a business perspective, it's been a good year for us. It's been by no means been plain sailing. I don't think anything's been plain sailing in the mortgage market for some time. But it has meant there's been more traffic diverting into us to talk about alternative solutions about how we can help clients.
I think it's really good that they've got what you sort of said there. I was making note of it just so and make sure that we talk about it, because we talked before when we first started doing this about education of mortgage brokers and having second charges, having specialist lending in your toolbox as a mortgage broker. And I don't think you'll ever stop educating brokers on second charge, on specialist lending,
Yeah,
full stop. I think you're, whether you accept that or not, Dave, I think that's just going to be part of what you and your team do constantly, because there's new brokers that come into the market. It doesn't really talk about specialist lending in CMAP or CFs or anything like that. There's nothing about it. Everybody's a first time buyer. Everybody's got 15% deposit. Everybody's got no issues, get paid very well, and the LTVs are all right. Whereas the real world, and more so now, and I'm hearing it a lot more, is around the second charge stuff and the specialist stuff that brokers need to be educated on and aware of just as much as they are mainstream, just as they are with protection, just as they are with, it needs to be there. And I think that it is good that firms are more, I think as business owners, if you're a sole trader, a one-man band, two-man band, then fair, like it is about education that's there. I think it's hard to get into larger firms and principals of large firms, because it's like, well, we're okay doing what we're doing, because they don't see it necessarily at the coal face of what's going on. They'll just know what cases are being placed and where they're going. They're not really, if they know the numbers really well, they might pay attention to it a little bit. But from what you're saying there's a lot more larger firms understanding that they need to educate the brokers that are seeing clients in this situation.
Absolutely. I mean, you're absolutely spot on there, because it is a variation of the smaller advisor firms, solo broker, all the way through to multi-advisor firms, but also the firms that deal with more affluent client banks. Because those clients, when their mortgage payment does change or they have a life event, it hits them harder than it would do your average Joe when they're doing it. It's all relative. But what we're starting to see is maybe the client bank that would historically never even considered a second charge mortgage is now going, actually, I need to wrap up this debt because my mortgage payment's gone up by X amount of thousand, and I've got this and got this. They typically tend to service their debt perfectly, but they sail closer to the wind. So those brokers are now opening their sort of minds to going, actually, second charge could be the best, or maybe the only option here, actually, because I can't do what they want to do via traditional means. So a second charge mortgage could help them. And I think the overall theme with debt con as a whole, I mean, it's typically been the number one driver for second charge consideration. No surprise in me saying that, really. But the overall theme has what can I save on a monthly basis? How does that affect my cash flow? Because typically the broker will be back in front of that customer within 12 to 16 months, typically 18, 24 months onwards, or when applicable, revisiting that to see if they can refinance it into a first charge mortgage again, because the labour of the debt has changed, or the client's circumstances have improved and so on like that. But in the short term, no matter what walk of life you're from and sort of how affluent you are or not, you're looking at cash flow. How much money can I save on a monthly basis? How can I put some money back in the bank rather than it going back out again?
I think it's like a good when you. I never thought about that in terms of the affluent side of it, because like I say, your demographic of your client is changing from that point. Because I would just expect it to be. You always think specialist, second charge, that sort of thing. It's like either people that are desperate situation and need the money, like bridging and need that cash there and then, or it's the ones that are debt consolidation and can't afford the monthly, or piecing the monthly together, managing the monthly payments, but need to structure it in a different kind of way. I never thought about it with regards to the more affluent clients that are, and we know, given the changes in the rates that we've had over the last 15 months or so, and will continue to do so, is managing that client's expectation into, but giving them that. It's again given as a broker, your role is to give that client an option for them and a solution for them. Doesn't matter what the scenario is. Maybe doesn't matter whether it's a little bit more hard work for you and a little bit more time consuming to do your research and piece it together. You've still got to do that job, but that's where your specialist sort of comes into it. So in terms of backup with that, how do some people? If I've got you're obviously doing a presentation today to 30 odd brokers, is that something that you're finding that you're doing is more of group sessions, two different businesses that you've done to before? The one man bands are sole traders have always known about you because that's what they do day in, day out. But you're finding that more of the larger firms are now thinking, oh, we need to get Dave in here or one of your team to understand this a bit more.
Yeah, absolutely. I mean, you've touched on a couple of bits there. Is finding the or presenting an option or a solution for the client. Yeah, and this is a conversation I have with brokers all the time. If a client gets in contact with them and they say they want to borrow, for example, £50,000, they look at a further advance. Now, if that's declined, well, then the obvious option should be consider a second charge. We know that doesn't always happen. But then, if the client can only get 20,000 on a further advance, the broker then can consider a second charge as an option and present them to the client. And the client then has the option to go, actually, I can work with 20,000, but no, actually, I do want the full 50,000. And the broker then can come back, we need to go down the second charge route. So I think there's two elements of it. One, it's providing the best solution for the client and giving them the option. So more brokers are opening up to that and realizing that a second charge is a possible alternative to traditional borrowing. And the other side of it is obviously in tougher times where the market has typically been driven by PTs. It's a revenue generator for a broker and a firm. And I think broker firms overall are starting to switch on to that because they're servicing their client and giving the client exactly what they want. And they're generating additional revenue in times where revenue is maybe not as forthcoming. And also, then you've got the other side of it where you've got client retention, because if someone's on a second charge, for whatever reason, within a period of time, you're going to revisit that and you're going to refinance that. And I think you touched on something else there. I think when you put the word specialist into something, everyone goes, "Oh, adverse must be dodgy, must be that." Actually, there was a poll that came out recently, and actually, I think it's something like 83% of second charge business that has been written this year. Um, is clients that have got mainstream first charge high street, high street lender names. So
Right.
they're clean clients. It's just whether it's failing on affordability, it's the demographic of the loan purpose, it's the criteria the first charge lender doesn't allow. That's why it's driving into the second charge market, not necessarily down to the demographic of the client being dodgy or adverse or blacklisted or whatever you want to put a label on it. They're good clients. They're clean. They're high street clients. It just means that they can't achieve what they want to achieve via traditional means.
You said something there. When you was talking, I wrote down two words, and then you said those two. Client retention. That thing for me was it's all. And I've done a solo podcast a few weeks ago about client retention, and we're going to talk about 2025. And my thing for 2025 is all about client retention from day one. I think that's the big thing moving forward that brokers miss out on, and the biggest opportunity for them. But you, like you say, it is all about client retention. Clients they want that the solution to the issue that they've got, or what their needs are, or what they're wanting to do. They want that solution. Now, if you're not able to go to the and explore every option, because you've got that mindset of specialist must mean adverse or something like, say, dodgy going on or something like that, then if you've got that mindset needs to change. You have to change that way of thinking, because second, like this specialist market is growing. There's firms that I know and I talk to and I work with that have also already started to look at having a specialist lending broker within their firm. So they've got somebody that they know and trust, and so all the people in the firm, the mainstream brokers, shall we say, for want of a better word, and that's not a better word, but they have somebody that's they know and trust to then go, do you know what? Let's look at working with that individual to do this part of it. And I'm still going to be looking after them for doing this. But then, and I think it's just is all about client retention. You've got that client, you need to keep hold of them and not give them a reason to look elsewhere. And if you're not going to go and explore every option and go and give that commitment to that client to find them a solution, they will go elsewhere and you will never get that client back again.
You're absolutely spot on. I think, from a client's perspective, as a average consumer, they don't know what a second charge is. They don't know what a bridge is. They might understand that they need a different mortgage on a commercial property than they do on their own home and stuff like that. But outside of that, typically they don't know, and that's why they've got a mortgage broker. So they're looking to them to come to advice. And I think, you take the bridging world. A lot of brokers historically have been put off by bridging because of the label that comes with it. It's deemed as expensive. It's deemed as all unregulated. It's all a bit dodgy. Well, it's definitely not. The market has massively changed, and it's not expensive. And there's a lot of different ways how you can structure bridging to get the client exactly what they want or achieve better terms. But again, if someone's coming to a broker and saying, "Oh, I need to do this," and they're going, "I think it might be a bridge, but you really shouldn't do that." Client walks out the door. They go to another broker who's switched onto it. That broker's lost that client forever, because whether they go for the bridge or not is irrelevant. But if the broker's presenting solutions, options for the client to transact, well, then that conversation is do I want to go ahead with it, yes or no? But the broker has shown that they're able to facilitate that inquiry, not just a generic high street sort of residential mortgage, etc. And that, so they're thinking outside the box. They're showing that actually they've got more options to service their client. And if that deal doesn't transact, you can bet that the next time that the client does find something that needs bridging, they will go back to their broker, because the broker's given them confidence they can work in that arena.
Yeah, I absolutely. I think that's the thing to take away is that if you've got an inquiry and you let that client go with a no, I might sort of patent that or sort of get that branded. If you let them go with a no in my typical Yorkshire accent, then you are just it's just such a waste. And it's funny because there's a broker that I know and I've known for a long time, and I work with him and with like been helping him with certain things with running his own business. And he sort of said that 90% of his business that he does is when they've been to other brokers, they've not done their job, and they come to him and gone, and that was like, he looked into this and he's sort of then thinking, like we sort of see all the time of where the bank says no. The big, oh, you need to see a broker because when the bank says no, this is all the difference
Yeah.
between a bank and a broker. You could do the same comparison between brokers, and it's like when the broker says no, it's like the same sort of thought process of if you're letting that client go with a no, then you're not doing your job properly. Unless there is, I know there's some clients where there's not an option. You literally know that there's not an option from pretty quickly. But I think it's not, the no should not be down to your lack of education or your lack of time or your lack of commitment for that client. It should just be because you cannot place it anywhere or refer it anywhere on. But if you're saying no and letting them go, you need to be looking at yourself and thinking, where do I need to educate myself? It's then look. It's not the blame. Then not blame is not the right word, but like the then responsibility. It's the broker's responsibility to find a solution for that client. If you're
Yeah.
letting them go without fulfilling your responsibility, you're not doing your job.
Exactly, and this is another part of when I'm talking to brokers that I regularly speak about. If you've approached positive or whoever your partner of choice is in the market, but it should be positive, then and you've had the conversation to say, right, I've got this client, is this the scenario? And we turn around and go, there's nothing we can do on that, but sit tight for another 6 months and tell your client in that if they keep their face clean, then there might be something for them. The broker can go back and confidently go, do you know what? I've explored everything in the market for you and there is no option. But the end result of it is that they have a conversation and go, yeah, that can be done because that happens all the time, especially in bridging. Dave, I don't think I've got this inquiry. I'm really sorry to waste your time. I don't think you can do anything with it. 10 minutes later, yeah, okay, I'll get it into the team. They'll come back to you with terms. What? You can do it? Yeah, yeah. There's definitely legs in this, absolutely. And it's but if they didn't have the conversation, they've just gone with a no, and that client picks up the phone or speaks to another broker, and the broker's won the business. And I think in the current market you can't, or I think brokers can't afford to be losing clients in a tougher market where things are just not as easy to transact on, and everything's taken a lot longer. A lot of PTs going on, so a lot less commission to the broker as well. So I think all of those elements, including or offering a more well-rounded proposition to the client, have come into play, which is why specialist is growing.
So in terms of, we understand, like, obviously it's been challenging for you for brokers. It's good that you are getting more of your market share, shall we say, from and your hard work and persistence is paying off on the education piece. 2025, what sort of have you got any thoughts around? I know what my thoughts are, but like, have you got any thoughts around the market? Any sort of things that concern you or challenges, or yeah, what's
I mean,
that's quite an open, that's very open question, Dave. I apologize for that, but hopefully
no,
people can
not
get
at all.
something out of
Not
it.
at all. I think the one thing is that none of us truly know what's going to happen. Okay, even the experts that stand up I mean, I've listened to so many economists, experts, etc., stand up on stage, and they all caveat going, "This is just my opinion," because we all know that overnight something can happen and the world goes to pot, and we all suffer as a consequence of it. Um, but speaking to lenders, they all seem fairly positive about a better year next year. We've definitely had a much stronger Q4 to finish the year, which is a fantastic way to finish the year. More business is now looking to transact. The stamp duty changes next year will definitely have an impact on the market, so we'll probably see an influx of business trying to complete before that comes into place. A bit like the stamp duty incentive, really, isn't it? It's going to be that effectively will cause a bottleneck because the legals and the valuations, etc., are going to buckle under the pressure of that. But inevitably, we probably will see that. How does that affect things once the stamp duty does increase? Who knows? It's definitely going to put people off. But then, does the market dip to accommodate that? Yeah, again, there's many different variants. I think from the point of view of second charge, I don't really foresee that slowing down because actually, whilst first charge, mainstream high street lenders, etc., don't or only have an appetite for a certain demographic of borrowing, and it's quite restricted, then it will lead into second charge. We have started to see more adverse come across in second charge, and although we can do the heavy stuff, it's the credit blips, it's the late payments. Typically, a client that historically is a good, clean client, but something's happened and they've missed a couple of payments here and there, and further borrowing is just being rejected by their first charge lender. So I think we'll probably start to see more of that filter through. Um, Bridging, I mean, bridging has stayed so competitively priced and such a buoyant market um, that I think we'll potentially see an influx of bridging to secure property again before certain changes come into the market. But again, after that, what does that look like? Is bridging, yeah, is pricing going to be affected and so on? I don't know. But for as long as I can remember, really, over the last few years, bridging hasn't slowed down. It's stayed consistently busy. And I think while the broker market and the consumer market both become more aware of that product, inevitably it will drive into it because there's more awareness around it and how it can work and so on like that. Commercial is huge. Commercial is just really, really, really busy at the moment, very drawn out. There is no such thing as a quick commercial deal. I'm yet to. I'd love to be proven wrong, and if anyone does hear that, but it's not. But it's a very buoyant market. You've got your traditional landlord clients now looking at maybe semi-commercial properties as an investment. You've got business owners looking for certainty of security. You know, if I give this an example, and when I'm talking about, if you look at what we do, for example, if we got kicked out of our office, if we've got a laptop and we've got a phone and internet connection, we can do our job, right? But if you're a mechanic or a barista or whatever it may be, you don't have that luxury. So if there's uncertainty there, and also with rental yields going up, so if you look at rent in the consumer world, that's just going on an upward spiral. It's getting more expensive month on month. That's the same in the business world as well. So then people are looking and going, actually, if I got a term mortgage on this, am I better off financially? So I think there'll be more business that directs into the commercial and semi-commercial world as well. Um, Development finance overall, I think, has been a lot quieter for the simple fact that cost of funds are more expensive, cost of acquisition is more expensive, um, and it just doesn't stack up a lot of the time. As simple as that. The first charge world for us has definitely spiked with activity. Sad reason, more adverse. That is it. It's a sad reason to be busy, but that's exactly why those lenders are in the market, to support those clients where otherwise they'd be stuck. They don't have a home, and they're helping people achieve buying a home or refinancing for whatever purpose it may be. An equity release, so that kind of fell off a cliff last year because of obvious reasons. Rates went through the roof and so on, but that has recovered well, and actually, the equity release or later life market, as it's now being known as, is very much untapped. And you look at the amount of interest only mortgages with no exit. You look at the client demographic that they've got pension pots that are no longer suffice for retiring on because of cost of living. The clients that have are at a certain age and they still have levels of debt outstanding, they've got no way of repaying it. It will drive into that market. So I think we'll see an increase in that. So obviously, if rates go through the roof again, that throws everything out the window. But assuming that things don't go too turbo on that side, then I think we should be in for a pretty good 2025.
No, I agree with that. I'm making notes there in terms of certain things that um, the first thing is 100% agree with you that nobody knows what the years. You can talk to the economists. You can talk to, obviously we've got the stability, if you call it stability, but we've got a new government kind of thing so going on. So there's a bit of stability, but not stability, but with regards to that. But I think 2025 will be 2025. I think you can just, as a broker, you worry about what's in front of you. You can plan for the year ahead, certainly, but I would worry about what's going to happen in quarter one, and then worry about what happens in quarter two at the end of quarter one. That would be my. I think it's going to be good, a very normal year, but a good year for brokers. I'm making notes in terms of things like bridging are huge for. There's a lot of brokers that once they get a bridging inquiry, they just think, oh, it's not something I can do myself. The instant reaction is just refer it, just get off my desk. I need it out of the way, rather than actually doing something with it where the options are. You get paid better on it. It's more education for you as a broker from a live example. So I would say if you do refer your bridging, speak to you about educate speak to you about educating your knowledge in terms of what bridging is like, and then go through the process yourself so you understand that. Again, with like, I never thought about the commercial side of things with the rentals and the we have seen as a business commercial inquiries increase. I agree with you. It's a very, very slow process. I don't know any commercial broker that says, "Oh yeah, it's a quick." We think the house buying and the home purchasing transaction process takes some time. Try and be in a commercial broker and see what that world is really like in terms of that. But then it's good to get your take on the equity release or the later life stuff, because I've sort of seen an increase in that as well recently. There are more inquiries coming through. I think you're absolutely right. It just goes back to options as a broker. If you've got a client that's coming to with an interest only mortgage at the end of their term and they've got no, and there are a lot of people that they've got no way out of sort of, they've got no chance of flipping it onto repayment. They've got no chance of there any other option apart from equity release. Then again, you've still got to make sure that you sort of educate yourself, but then making sure you refer it to someone who will go that extra mile and who does know a lot about the market. Definitely, definitely. I think it just, when you look at what you've said there and reflect on what you've said there, Dave, about 2025, there's nothing that I don't disagree with in terms of there still will be opportunities for brokers, but it's all about client retention. I'm not going to say
Yeah.
that phrase again. Don't let them go with that with a no, but yeah. But it is all about retention, and it's all about making sure you educate to every option that's in that you've got there.
Yeah, absolutely. And listen, I think as a business overall, what positive do? I've got firms that do all their bridging themselves directly, which is that I'm not there to take that away from them. But what they will do is phone me and go, I've got this with this lender, but apparently I can get better terms with you, or actually I can't access this lender, or I've never used them before. So for a cleaner customer journey, can we send it over to you? Yeah, and that may be ad hoc. You've got other brokers, as you touched on in the beginning, where they're maybe newer entry to market and they haven't got the experience around it, so they'll refer to us, or it's exclusive products that we can better on for it. But I mean, even if you look at still, I think it's been a few months since I checked it, but this year it was circa just shy of 80% of our directly authorised book preferred to refer bridging cases to us because it provided a cleaner journey for the client. And because we're so low fee on what we charge, it has no detriment on the client. They're not paying hand over fist for us to provide the service on it. And actually, the broker doesn't really lose out on any commission. So there's that element of it as well. But that's not to say, if brokers are doing it directly themselves, then good for them. That's good. And actually, I'm very much open to the brokers going, do you know what, I do a bit of this myself, because actually they're switched on. They're looking for ways to help their clients rather than being shying away from the specialist stuff.
Exactly. I think that, and the thing is with referrals is that people sort of you tend to go, right, I've referred it now, and I'll wait to hear back from the broker or the lender or the specialist who's looking after it. I don't speak to the client again. Whereas you still need to be involved with the process. You still need to be touching base and finding out what's going on with that particular client, because then you need to be integrated with that. And if you're not, and it just says referral pass on, don't need to worry about it again, you need to change your process with that to think, I do want to be more involved with it. I do want to understand what the client's got going on, and I do want to know what sort of the what's happening kind of thing. So you are trying to educate yourself a little bit more.
Yeah, absolutely. And I think that that's the way as a business. I mean, it does differentiate between what permissions you do or don't have to advise or don't advise under sort of your network banner or your club banner or wherever it may be. But we will speak to the broker and provide them headline terms before we've even engaged with the client to help add value from the broker's perspective, so they can present those terms and understand the product and how it looks and so on like that. By the same token, the broker can refer it straight across to us, and we'll speak to the client directly. But then we update the broker afterwards on what's happened and what the journey is, and they've got numerous ways about how we can communicate with both parties all the way through the application, so that everyone's fully aware of the journey from application all the way through to completion.
And it's all about that service, that service that the client's chosen you as a broker. If that you've got that lead in the first place, it tends to be about either some the service that you've been promoting, and that's
Yeah,
the thing with it is it is all about the service. So if you are integrated with the, even if you can't do it yourself, even if you don't want to do it yourself, but you're still following through the process, holding the hand with the client, they don't know that that's any different. That it might be somebody else is actually submitting the application or sourcing the mortgage or find like or sourcing the lending, whatever that.
yeah,
But they don't see that. They just see that, yeah, that might be somebody else that's going something that's going on in the background, and they're helping you with that. But then at the end of the day, they are still your client. And then they're more likely to stay with your client, even though you can't do it yourself and you've had to refer it, because you've been integrated in the process with it, they'll still come back. They won't go to somebody else
no,
in 2 years' time, a year's time, five, whatever the case may be. They'll come back to you and go, do you know what? You helped me out before. You got this solution for me. I need another solution now, given my scenario. And I think brokers can lose sight of that, thinking, oh, it's off my desk. I've referred it. I'll not need to worry about it again. But the clients, again, it just goes back to client service, client retention.
absolutely. And yeah, look at bridging as an example. Typically there is an exit, and the exit a lot of the time is refinance. So we're doing a lot of bridging for commercial acquisition at the moment because commercial term is taking so long to facilitate. Actually, if the client's getting a good market offer, they're using a bridge to acquire to safeguard that property, and we're working on the commercial term in the background, or the broker, whichever it may be. So the brokers that are switched onto it, going right, the client needs to do this, but if I do a bridge, when can I exit them? I'll be working on the commercial or the term product in the background, whatever that looks like. So it is that client retention. There's a reason to have a conversation, and look at second charge as well. You look at second charge. If someone's going into a 5-year fixed, well, they're not going to not want to borrow money within that next 5 years, or it's very unlikely they're not. But they might not know that they can borrow money. They might not realise they can do it. They might have a life event that changes in that. So again, those brokers that are doing the regular courtesy checkups, and it doesn't just lend into specialist lending. What we're doing, it leads into wills, it leads into protection, it leads into all different variants where brokers can increase their revenue by talking about these things. And we all know that conversations lead into more conversations that leads into the business, because if you have a conversation, you understand someone's wants and needs, and then you go, right, okay, well, you can't actually do that what you're doing now, but that might lead into something we do, or it might lead into another field of the market that the client's interested in exploring, or whatever else. But having those conversations generates business effectively, and also safeguards that client, because for example, a year down the line of a 5-year fix, and the client doesn't realise they can't do anything, but another, John down the pub that they speak to, their mate, has gone, well, oh, my mortgage broker just done this for me. Oh, right, okay. And they go and speak to that mortgage broker inadvertently rather than their own. But that broker's just lost the deal through doing no fault. But I think what with a tougher market and with things not being as straightforward, brokers have started to switch on of, rather than leaving it 6 months before the product's due to expire, of doing the courtesy check-ins. How's life? How's everything going? Yeah, anything changed, and that kind of thing. Sort of, the nice conversation rather than a sales conversation. But inevitably, oh, do you know what? Me and my partner are separating. Okay, great. Talk to me about that. And then, the stuff, because typically, a client isn't going to pick up the phone to their broker and go, just racked up loads of debt. Could you help me? Because they're embarrassed to do so. But if you broach the conversation, open that up, then it leads into potential business. There might not be nothing you can do, but there might be. And again, if you're helping that client and find a solution for them, then you safeguard them, and you've got a client pretty much for life as long as you look after them.
Exactly, because they won't forget. Clients won't forget that. You give that scenario about the mate down the pub, and whatever the client scenario is, if another broker's the forefront of the conversation because they did something that you didn't want or didn't talk about or didn't sort of acknowledge or wasn't educated about, and you had no knowledge of and just dismissed it, you're going to lose that client today. But you're also going to lose. It's like everything. It's the knock-on effect of everything else. Just the lifetime of that client, the protection cases, the referrals that they get, the referrals that they give. It's a big knock-on effect. That one little thing might not seem very big today, but over the lifetime of running a mortgage business, the lifetime of that client is costly, that you've not even, the client's not aware of it, or they should be the forefront of their mind thinking, I need to speak. I wonder if my broker does that. Not, oh, I'm going to speak
Yeah,
to their broker because that's what their broker does.
exactly. Yeah, and I think another conversation I have with brokers is say, look, If they're doing it themselves, and that's absolutely fine. But if they're not doing bridging or seconds and so on like that, I said, but you advertise that you do it, but you don't need to be an expert in it. That's why you partner with us. And if you need us to give you a little bit more meat to go back to your clients, so you can have a more structured conversation with them about sort of what that looks like, depending on the product, straight before you've even spoken to the client, I can help you do that. But if you're not advertising it and they go to you as a broker and they go, does residential, does buy sell, nothing else on there. But broker B down the road says he does second charge, he does bridging, he does commercial. I'm going to go and talk to them because my broker doesn't do it. It's human instinct. That's kind of what happens. So
Exactly.
again, getting the intermediary market open to the fact of, don't be scared about it. You don't need to be experts on everything. It is, that's what we're here to support you with. And then on the flip side, if brokers are doing it directly themselves, but they need access into someone, or a second opinion or something, well, that's what we're here for too.
Excellent. Dave, I think I need to let you go, and you've like sort of took enough of your time. We've sort of been talking for 40 minutes and just chatting again with no agenda as we always do. It's been great to talk to you, but I'm conscious in terms of your holiday sweater, and you need to burst into that room next door and sort of revisit the things we've just been talking about, funnily enough.
Exactly
So,
it.
so Dave, thanks for agreeing to come back on the podcast. Really appreciate you sort of taking the time out of your busy time just to, and the messages that I'm getting from this are two things. One is about education. So if I'm looking to get educated as a sole trader, small firm, large firm, then I'll make sure people will be able to reach out to you on LinkedIn. I'll make sure all your contact details are on the podcast, so people can easily reach out to you. And if you're a mortgage broker and they don't see your posts on LinkedIn already, I don't think I know any broker that doesn't know who you are. So yeah, the power of LinkedIn, shall we say? So but yeah, thank you so much, mate. I really appreciate you coming back on, and yeah, and also as well timing. So we've got Christmas and New Year coming up. So I hope you and family, obviously, you're always going to be family, young family, and you're going to be busy over the festive period. And then yeah, all the best for 2025.
Yeah, thank you very much, mate. Well, I've managed to save some holiday inadvertently just from being having a busy year. So I've actually got a couple of weeks off on the run up to Christmas. So it's going to be very nice. Yeah, it's good.
Nice. Well,
Can't
enjoy
wait.
your break. Make sure you get a break, and then no doubt we'll catch up in the new year. Thanks very much,
Yeah,
mate, for coming back on.
yeah. Cheers, buddy. Appreciate it.
Thanks, Dave, for being a great guest, returning guest back on the podcast, and the final one of 2024. Thank you for listening. Thank you for watching this week's The Mortgage Broker broadcast. Thank you for watching and listening if you have done so for the other episodes of 2024. And if you found today's episode helpful, or any other episode of this podcast, please subscribe, please leave me a review, please leave us any thoughts or comments on whatever platform you listen to or watch this podcast. Just helps us to reach more mortgage brokers and business owners who may benefit from listening to this weekly podcast. And if you are thinking about becoming a self employed mortgage broker, or looking to start your own mortgage broker brand and business, or just looking to accelerate the growth of your existing business, visit my website, craigskelton.co.uk, schedule a discovery call, or just simply get in touch, and let's explore how I can help and support you achieve your goals in 2025. Stay motivated, stay focused, stay positive, and don't forget to run your own race.